Okay. So accounting for equity. So question one, I skip first. Just now, I don't have time for this theory. Okay. I would rather share the past year question and discuss it very fast just now. All right. When you talk about this accounting for equity, it's all about your share capital. Okay. How do you finance your business based on the issuance of shares? We got two types of shares. You can issue, a company can issue ordinary shares or preference shares. So ordinary shares, the terms may explain to you how common this type of shares, and these shareholders or the investors who purchase the shares, they are entitled for ordinary dividends. The mechanism on this distribution for ordinary dividends, you only pay those dividends to the ordinary shareholders after the preference shareholders receive their dividends. So they kind of like a balance of your retained earnings. You still remember when I talk about these dividends that day in your SOPL, in your SOFP effect, okay? Your ordinary dividend reduce the retained earnings. What is retained earnings? Your accumulated profit, which is last year profit you brought forward, then you plus this year net profit or net income, so you generate closing date retained profit. So if we have the profit, then only we distribute the dividend to the ordinary shareholders. Unlike the preference shareholders, they receive first. That's why some reports, they include this payment for the preference shareholders dividend in the expenses, which is finance cost, in the SOPL, statement of profit or loss. So you have to differentiate these two. And this topic also, you have been introduced with treasury shares. I saw many questions relate to treasury shares. So what is treasury shares? Is a shares buyback. The practice is when the company issues shares, okay, you sell shares to the public, to the investor. So investor purchase the shares. So when they purchase the share, they will pay you money. I can say that these investors, these shareholders, finance the business, right? So indirectly saying that we owe them money because at any time when they sold the shares that they bought, they want their money back. Okay, you have to pay back their money. So this is the practice that we have in the market. From our side, from the company side, we sell shares. We collect money from the investors. Then when they sold their shares, we need to pay back their money. Okay. So when you sell shares, you get cash. At the same time, your equity goes up. Right? If you go through the double entry, the journal, it would be credited lah, because equity increase on credit. Okay. All right. What else? Talking about these preference shares. Okay. You should know the fixed dividend rate. For example, like here, I have this company with 9% preference shares. It is a cumulative preference shares. So 9%, what is this? This is the dividend rate. Okay, dividend rate. How many percent of dividend you will get upon your amount investment? Okay, your ringgit or the value of your investment. And further here in question 8, you have the concept of cumulative versus non-cumulative. If cumulative meaning your dividend, if they can't pay, it will be accumulated for the following or the next year. If it is a non-cumulative, they will pay for that year. If they don't pay, then it's burned. Something like ordinary shareholders. Okay, so let's have question 2. A company issues 2,000 units. Okay, this one is the units. Don't be confused. 6 ringgit par value. What is par value? The minimum value of your shares that you're going to sell to the public. You can sell more than that, but not less than 6 ringgit. So that's the meaning of this par value. Okay. So for cash at 13 ringgit per share. So meaning this company, when they sell the share issue, meaning they sell the shares to the public, they sell at 13 ringgit. The cost of these shares is 6 ringgit, the par value. So I can say that they are making profit. Why company can sell at 13 ringgit and public tends to buy? Because the company is doing well. They have a good reputation, good performance. Even though they know that the market value is 6, they offer at 13, people still wants to buy the shares because they know that they can make money from their investment. The company will grow. Okay. So this is what we call a difference between this 13, the price of the shares being issued, and the par value as a share premium. So this is what you're going to write in your answer. So the question asks you to generalize. So debit cash, 2,000 unit multiply the issued price. This one. Debit, you receive money, cash is asset, asset goes up on debit. And then credit, you get money, your share capital goes up. Your equity, okay? Equity goes up on credit. So share capital on credit. 2,000 multiply 6 ringgit. So this is your par value just now. Right? And then if you see my debit 26, my credit 12,000. So I have to balance the debit and credit. For these general transactions, I have to add this 14,000. So what is this? This is your share premium. Or in other words, I get the 2 ringgit, multiply the 7 ringgit. How do you get 7 ringgit? The difference of this. 13 and 6. Issued price and the par value. Okay? So I get 14,000. That's all. Question 2. This is a reserve. This is the equity. Reserve, when you prepare SOFP, equity, reserve, and liability. Yeah, now you go to the next level. Normally you write equity and liability, right? So now you have share premium, it is a reserve. Okay, next. Question 3. Company issues 5,000 units, 100 ringgit par value, preference share at 118 per share. Generalize the issuance of the preference shares. Here they don't ask you to compute how much is the dividend payable. Okay, that's why they don't provide you the dividend rate or dividend value per shares. Okay, so I have to record the issuance of preference shares. So debit cash, 5,000 unit, multiply 118, the issued price. Okay, so we get 590. Hey, today many students didn't turn up. 2, 4, 6, 8, 10, 12. I think around 4 students. Can I have my attendance? And always the alien. You all, some of you haven't signed, is it? Aduh, hai. This topic, lesser mark as compared to other topics, but don't take for granted. Yeah, sometimes the easy one you can't do because you over exercise on the tough part. Yeah, and normally, if look at the past year question, they test you on journal. Journal. That day your midterm, some of you cannot do the journal. Do you remember? Okay. So please be careful lah. All right. So just now 5,000 units multiply 118, the issued share price. So debit 590. You collect from the investors. And then credit preference share. So preference share is your equity. Okay, equity, not reserve, equity. It is other type of share capital. You got two type, ordinary share and preference shares. So 5,000 multiplied 100, your par value. All right, 100,000. And then debit and credit different by 90. So this 90 meaning I have the share premium. So how am I going to write? Share premium dash preference. Share premium dash ordinary. We cannot lump together, yeah? Because you see the transaction represented by different price per share. So you cannot just take, you put inside your SOFP under equity, share premium 14,000 plus 90. Please separate it. Okay. Please report it separately. All right. Number 3. Done. Number 4. A company has 70,000 ordinary shares outstanding units. It declares a 1 ringgit 50 cent per share cash dividend. Just now I told you preference shares, you have the dividend rate. Here they give you value of dividend per unit share that you bought. So if you want to know how much is the dividend, of course you need to know how many unit shares that you bought, right? That you issued. So you need to get the unit multiply the value. If I give you the dividend rate percentage, you need to know how much you have invested. So ringgit Malaysia, you bought, right? Let's say 100,000 ringgit shares. So multiply with the rate of dividend. You know what? Normally students confused about this part in exam. Okay, so be careful. So I need to record the entries. Okay. Per share cash dividend on November 1st to shareholder on record on December 1st. The dividend is paid on December 31st. So prepare the entries on the appropriate dates to record the declaration. You got two things here. It is a practice whereby we declare first the dividend. It is such a happy news lah to the investor. We declare first. But normally once you declare, they pay lah. I never heard that whereby company declares suddenly said no money to pay dividend. And because ordinary shares, they will receive dividend after you close your account the following year. When you conduct your AGM, annual general meeting, right? You announce how much profit we got. Are we going to have the same directors? Are we going to elect a new directors? And then that's the time you're going to declare. We are going to pay the dividend value, blah, 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 on May. Something like May, April lah. In Malaysia common, because our accounting year December. Good company, they may declare within the year. They confirm lah, they can make a good profit and they should share this profit with their ordinary shareholders. So that's the practice. So when you say that you declare, so debit dividends, or you can write also as cash dividends. How much? 70,000 multiply 150 cent per share. So I get 105,000. Credit dividend payable. Why we have this dividend payable? When you see this term, it is on credit, meaning your liability goes up. Liability increase. You haven't paid. Okay? When how? So early today, you haven't paid. So payable. Next, when you debit this dividend, is it an expense? No. Remember, ordinary dividend. This is ordinary shares. Ordinary shares dividend. It is not an expense. Even it seems like, oh, they're expenses. We make payment, right? No, no, no. When you debit your dividend, meaning you're going to reduce your retained earning. What is retained earning? Accumulated profit. Profit increase on credit. So when you debit cash dividend, you're going to reduce your retained earning. Something like your return inwards and sales. We have separate accounts, right? You can say that return inward reduce sales, right? Your customer returns good to you due to default product. Your sales goes down, right? That's the story. Same goes to here. When I pay dividend, my profit reduce. So profit reduce on debit. When I receive return inwards from my customer, my sales goes down. Sales reduce on debit. That's why return inward increase on debit. Okay. Some of you always put dividend in the expense. Wrong. Preference shares dividend, yes, but not ordinary dividend. So we haven't paid, it's a liability. Liability increase on credit. Then on December 31st, we make payment, right? We have payment of this dividend. So when 31st December? So on 31st December, debit dividend payable, one credit, one credit, one debit. So set off, cancel. Then we make payment, credit, cash, or bank. That's all. Any question? No? If now we move to question 5. We got a lot of question here. I try to cover all because I can't predict what sort of question can be tested. It is everywhere in this topic. I know it's a little mark, 10 marks, but it's so meaningful to some students. Frankly, if you ask me to look for 2 marks in your answer script, headache, Half mark, okay. 1 mark, maybe, okay. But 2 mark, 3 marks, I don't know where to find the mark, Eh? So please accommodate all your knowledge to fulfill the mark allocated in the question. Question 5. For the year ended 31st December 20x4, company reports net income. What is net income? Is it equal to net profit? Yes, you will say yes. Does it so? Yes. Any objection? Net income is net profit. Okay? Cannot ask me in the exam. Is this net profit? I'm not going to answer. Net income are the terms for net profit. And dividends 55,000. Prepare the retained earnings statement. Statement changes in equity, or some book called statement of retained earnings. Same thing lah. But I think your syllabus recalls retained earnings statement of retained earnings. Same thing. For the year, assuming the balance in retained earning on 1st January 20x4, so beginning, opening balance is 220,000. All right, this is the title. Guys, during midterm, many students, title also wrong. You lost 2 marks for that. Title also wrong. SOPL, statement of profit or loss for the year ended or year ending, I also accept. Statement of financial position, as at or as of, I also accept. Retained earnings statement for the year ended, meaning it's just for that particular year. You cannot have last time, accruals or deferrals or prepayment here. So be careful. Okay, so title, first opening balance, the last year one. And then your net profit for the year is given 140, this one. Okay, 140. So we got a total of 360. We distribute dividend, we make payment. Is it payment? I just mentioned 55. So is it pay or declare? We still minus here because they use the retained earning, utilize the retained earning. So you make payment or you declare the dividend, your retained earning should be dropped lah. Okay, so minus 55,000 the dividend, so I get 305. That's all. Question 6. During its first year of operation, the company had the following transaction pertaining to its ordinary shares. 10 January, issued 70,000 unit shares for cash at RM 5 ringgit per share. 1st July, issued 30,000 shares for cash at 7 ringgit per share. Generalize the transaction, assuming that the ordinary shares have a par value of 5 ringgit per share. So this, what is this? 5 ringgit and 7 ringgit. This is the par value. So what is this? This is the price of what? of the share when you issue it, when you sell it. Okay. So in other, if I want to know how much I collect from the investor, oh, Cibe, go and wash your face, Cibe. 70,000 multiply 5. Go to the washroom and wash your face. It's a big awakening. I know, 4 o'clock, very tired. Okay, this is your issued price. This is your par value. So in exam, fine, where is it? Definitely these two price will influence your answer. Okay, so I generalize the par value of 5 ringgit. So on January 10, 70,000 ringgit, 70,000 unit multiply 5. This is your collection. Okay, the one that you collected from the investor. So this is your issued share price. So debit. Asset goes up, you collect money. And then your equity goes up. So share capital, ordinary 350,000. Okay. Why there's no share premium? You see, the second one, July 1st, I have this share premium. But why on the 10th January, I don't have the share premium? Anyone? No trial? You look at your issued share price, 5 ringgit. Your par value is 5. So meaning you don't collect extra, right? This is your minimum cost of the share. You issued to the investor 5 ringgit as well. So no difference. So that's why I got no share premium. There's no reserve that I collected from the investors. For July 1st, my issued share price is 7 ringgit. My par value is 5 ringgit. So the one that I collect from my investor is this one, 30,000 multiply 7, 210. My share capital, 30,000 multiply the par value, 150. So the difference, debit and credit, I have credit. So this is a reserve. Reserve account always increase on credit because reserve is part of your equity. Okay. Equity, reserve, and liability. Now you have the reserve. So on credit, share premium. Okay. What if we got no par value, but we got a stated value of 1 ringgit per share? Okay, no par value, but we have stated value. So we compare the stated value and your issued price. For 10 January, 70,000 multiply 5. This one same lah. How much you collect from your investors? 350. My share capital, 70,000 multiply this 1 ringgit. The stated value. So 70,000. I have different debit and credit. I need to top up the credit side. So again, I have the share premium. On 1st July, I collected from my investor 30 times 7, 210. Still. Okay, 210. And then my share capital, 30,000 multiply 1 ringgit, 30,000 ringgit. We have different debit and credit. You put on credit, share premium. This is your cost. You can sell at 7 ringgit. So in other words, you can have reserve of the 6 ringgit difference for each unit shares you sold to the investors. Okay, any question? If no, we go for 10 minutes break. Then we continue after this. very important. Bank reconciliation is an internal control mechanism. Yeah. What on the bank recon? Uh, Statement of SOPL, statement of financial positions, statement of profit or loss. You mean your midterm? Are you talking about your midterm or what? The topic. Topic after adjustment. Oh, I don't remember the topic because why? Because I don't cover the lecture. What is that? This one? This one is after adjustment. This is the financial statement. Oh, this one. This is your assignment. This is your assignment actually. We don't have it in the lecture. No. No. Financial statement with adjustment only. We don't have financial statement analysis. Yeah, even though the past year also we don't have that. Wait, yeah, let me check. Financial statement. It's not analysis. Like your midterm. I think I show you last time. No, it's I can say it's similar. You are still doing with adjustments. How many? I'm not sure because Dr. Nick is the one who prepared the question. How many adjustment, right? I tell you, I saw this one student. He memorized the format. He memorized the format, meaning after sale minus return inwards. After that, minus COGS, start with opening inventory plus purchases plus we don't have that day other custom duty or whatsoever, right? Minus return outwards, minus closing inventory. He just follow the format. Then no adjustment, no depreciation, the interest is wrong. So he skip all those adjustments. Half mark, he get of 17 point something. And 17.5 or 17, something like that. Half mark, no adjustment at all. Yeah. So if you know the format, then it will be okay actually. In the additional information. I think around 5, isn't it? Uh-huh. I show you the passive question, right? It should be something like this. Around 5 or more than 5? Oh, that one depends, Abdullah. I can't tell you how many adjustment. Like here we have 8. But this one, no adjustment, right? We just take this value. This one, value of supply on hand. So this one, you have to see whether you have prepaid or accrual. So technically, I have 7. Like here, insurance prepaid. We have the depreciation. How long you take? How long you take for this adjustment? So that's why I said, like that guy. I think he give up with he don't have time. He didn't have time to study on the adjustment, so he just memorized the format and just park every amount for the details. And already got 17 marks. Some of you, the format is run away. I don't know the alien format that I saw. I do. Please make up on this. This one how many marks? I think 25. 25 marks. That day is 50 marks. 35. Oh, 35, sorry. Your paper is 35. 35 marks that day. It's okay. You still have time. Work for it. Okay lah. One day once. You do this question. I tell you, this question is very powerful to influence your emotions during exam. I saw that day many students kind of give up when they see can't do this. Okay? Right, let us continue. Recon, if you are confused, go through my video. I think it's really helpful. Okay, I know. Don't go for the. You need to go the simple question one, which is you have the cash book, you have the bank statement, right? I think the first two. The first two. Normally in exam they give you a complicated one, which is I think somehow at the bottom. Right, that. So the bottom one is the past year question is something like that. So go through this tough part also. Don't just consider, but don't skip the easy one. I scared who knows that the easy one come out, then you don't know what to do. Okay. Okay. Let's go question 7. What is this? Company issued 1,000 ordinary shares. Unit. Okay. So unit. Prepare entry. So journal. If the shares had a par value of 5 ringgit per share and were issued for a total of 48,000 ringgit. So you issue at 48,000, meaning you collect money from your investors. How much? 48. This one, debit, cash or bank, both are accepted. Except the question state collect check or auto what through bank. That one you must have debit bank lah. But frankly, I close eyes lah. Bank or cash similar. Okay. But when you work in future, no, or else to forever your bank record will not be balanced. Okay, so I have debit cash and then credit my share capital. Equity goes up on credit. So how much is your par value? 5 ringgit. So 1,000 unit multiply the par value. 5,000 credit. Difference, right? Debit credit. I have to top up my credit. So this is going to be my share premium. Next. I have Dalit. So I have Shibwe. I have Lin, something like Lee, like that. I remember. Gee, your name like a Malay's name, you know. So 43,000, okay? Rebalance of this journal. Next, shares has a stated value of 5 ringgit, issued for a total of 48,000 ringgit. So you collect from your investor 48,000 debit cash, 48. Your share capital credit equity goes up. So multiply with the stated value. So 1,000 unit multiply 5 ringgit. So I have, yes, true, 5,000. So debit credit we balance off. We top up this 43,000. Share premium again. Next, C, shares had no par or stated value and were issued for a total of 48. So we cannot differentiate, right, between your issued price and your par value or stated value. So meaning debit cash, credit share capital. No share premium. Okay. The share had a par value of 5 ringgit, were issued to attorneys for services during incorporation value at 48,000. You want to transact these shares, sometimes you involve like the agent. You must pay for the agent. Some company, they must go for these rulings, all that. Then they must involve lawyers to prepare the documents. So you must pay for 48,000. For the attorney is lawyers bill, lawyer service. Okay. So from here, I know company issued share to pay for this 48,000 ringgit legal fees. Or you can also call it as organization expense, or you can put also incorporation expense. But normally we call it organization expense. Expenses goes up on debit. So debit organization expense, the amount that you want to pay for the legal fees, the 48,000. Expenses increase on debit. And then you credit share capital, you issued 1,000. The par value is 5 ringgit. So 1,000 multiply the par value, this one. Then I want to balance off this journal. I have to top up 43,000. Again, on credit, I have share premium. Ask you question, something like this, Later, I hope we got time that we can review it. The shares had a par value of 5 ringgit per share and were issued for a land worth 48,000. Meaning you issued shares, you sell shares to the public, you want to buy land. You use the money that you collect from the investors to buy land. That's the meaning of this transaction. So debit land, asset goes up. Debit land, 48,000. And then credit share capital, 5,000. You multiply the par value. So the difference, I have to top up on credit share premium. Okay. That's all for question 7. Moving, question 8. Company issued 100,000 unit, RM20 ringgit par value, cumulative. Cumulative versus non-cumulative. 9% is the dividend rate for preference shares on January 1st, 2022 for 2080 million ringgit. In December 2024, Raytech, the company, declared its first dividend of 550. So meaning, year 2022, year 2023, year 2024, you close your account, right? Then only end of year they pay the dividend. Meaning 2022 no dividend, 2023 no dividend, 2024 they start pay the dividend. How much? 550. End of year. Meaning you complete your business in account business year of 2024, year 2024, then only you pay the dividend. Prepare company journal entry to record the issuance of the preference shares. So issuance of the preference share, debit cash. Okay, we collect 2080 during the issuance. So debit cash 22.08 million. Credit preference shares 100,000 unit. This one. Multiply your par value, you get 2 million. We got the difference. We have to top up on credit. So this is the share premium. You put dash preference. Here share premium for ordinary share. This one is the share premium for the preference share. Okay. That's on the issuance of preference share. If the preference share are not cumulative, how much of the 550 will be paid to ordinary shareholders? Non-cumulative meaning we cannot pay the dividend for preference shareholder on 2022, burn. Cannot pay 2023, burn. So we just pay 550. Okay, so we just pay 550. So we need to know how much goes to preference shareholders. The dividend goes to preference shareholders. So get your 9% dividend rate, multiply how much is the value of preference shares. So how much is the value? How to get? It's all right. This is the value of your preference shares. So 9% will be entitled for dividend. After I invested 2 million ringgit, how much dividend I will get? So you get your 2 million ringgit multiply 9%. So this much is the preference shares dividend. It is non-cumulative, so only I just pay once lah. So I don't bother the 2022, 2023. It is non-cumulative. Not cumulative meaning non-cumulative. So how much goes to ordinary shares? The balance. 550 I pay dividend, 180 goes to preference share, 370 goes to ordinary shares. If it is a cumulative, how much goes to ordinary shares? So your total dividend 550, we pay for 3 years, 2022, 2023, 2024. So just now you already computed, right? 180, you just simply multiply with 3 years. I got 440,000 goes to preference shares. So the balance of 10,000 only we will pay to the ordinary shares. That's how cumulative versus non-cumulative. I bet you some students will be confused. Maybe when you revise this question, you should emphasize your understanding lah on this cumulative versus non-cumulative. Sometimes I forgot to switch on the mic. Question 9. Company had the following transactions during the current period. Issued 5,000 RM1 ringgit par value ordinary shares to attorneys. Something like the previous question. We pay for the legal fees. We need to issue shares. No money. Okay. That's the purpose. We issue shares. We sell shares. To attorneys in payment of a bill of 44,000 ringgit for services performed in helping the company to incorporate. So generalize. So 2nd March. Debit your expense, organization expense, 44,000 ringgit this much. And then credit share capital. We issued 5,000 multiply 1 ringgit par value, go to credit. And we have the difference, right? Debit credit. So I have a share premium here. Next, June 12th. Issued 60,000 unit, 1 ringgit par value ordinary shares for cash for 468,000. So you collect from your investors how much? 468,000. So debit cash, 468,000 ringgit. Credit share capital, unit multiply your par value. So I get 60,000 ringgit. And then I have the difference, right? Debit and credit. So we go for 408,000. We need to top up here. So it's going to be your share premium. Guys, in midterm, during midterm, I saw many students credit first, after that debit. I close both eye, I give full mark. Maybe you should improve that in the final. Okay, many. Credit first, after that debit. No. Journal is always start with debit and then credit. You see, we inward this credit. I believe your final exam, you must have your journal, especially this topic. Bank recon no lah. PPE, your asset, non-current asset, right? Accounting for depreciation that day. Double entry. That's possible, journal. Okay. Next, 11 July, issued 1,000 unit, RM 100 ringgit par value, preference share for cash at 110. So this is your issue price. So you collect from your investor, 1,000 ringgit, multiply 110. So debit 110,000 cash or bank. And then credit our share capital, the preference shares, the unit multiply your par value. Okay, so I get 100,000 ringgit. So debit and credit, we have to top up 10,000 on credit. So share premium preference shares. Okay. Next, November 28th. Purchase 2,000 treasury shares for 18,000. Okay, treasury shares. What is treasury shares? Share buyback. What is the practice? As a company, I sell shares to the public. So investors, you all buy the shares. So you will keep the shares lah, as long as you wish. If you think that the price of the share goes up, then you tend to sell. So you make profit. Let's say you not yet sell, suddenly I want to buy back the shares. I want to buy back the shares. Of course, if I want to convince you to sell back the shares, I must buy the shares higher price than the day you bought. So that is your treasury shares. Okay, treasury shares, share buyback. That's the situation. I sell shares to you, you buy. After that, I buy back the shares. After that, I sell back the shares. Sorry, I sell back the shares to you. We have this kind of things. This is how treasury shares work. So when you have treasury shares, your equity being reduced. Why? Because share buyback. When I sold shares, my share capital goes up, right? You see, credit share capital. Credit share capital meaning share capital credit, your equity goes up. When you buy back the shares from the investor, your share capital reduce. So treasury share reduce your share capital. Something like the concept of return inward reduce sales. Or dividend reduce retained earnings. You must have separate account. Treasury shares, we call it. So when you purchase treasury share, meaning you purchase back the share from your investor. Before they sold it, of course. So debit treasury shares, 18,000 ringgit, credit cash. So you pay you buy back. When you sold shares, you collect money from the public. When you buy back the shares from the public, you must pay them. Okay, so credit cash or credit bank. Now, no point you go and memorize. Actually, there's a story behind it. At least you know the ideas of this practice, so that easier for you to memorize lah. Why cash? Why not others? Okay, that's all. Question 9. Question 10. This tutorial, you must study almost all the question. Why? Because I saw the passive question is combined. Later we see the question. It's combined. You don't have specific like your tutorial. And they combine. So you must go through all questions. But somehow the marks is little lah. Only 10 marks as compared to other topics. On January 1st, company had 98,000 unit, no par ordinary shares issued and outstanding. The shares have a stated value of 4 ringgit per share during the year the following occurred. If we have all the transaction, prepare the entries, if any, on each of the 3 dividend dates. It's involved your dividend. So we have on this one issued shares. This one declared dividend. All transaction regarding dividend, we have to show the journal lah. And then we paid for the dividends. Then another one. This one declared again another dividend. So 15 June. 15 June, debit cash dividends. How much? 116 multiply 1. Where's this 116 comes from? We have 98,000 unit shares. On 1st April, we issued another 18. So 98,000 plus 18,000, you issue new share, meaning your share capital goes up, right? So you get 116 units. This one. So we declare dividend 1 ringgit each. So 116 unit up to 15 June, you see? That's why I plus 98 and 18 because this one you issued shares on April. So meaning by 15 June, I have a total of 98 plus 18,000 unit shares. So 116. And then credit my dividend payable because you declare, not yet pay. Okay, you just declare it, not yet pay. So you have liability, credit dividend payable. Next, on 10 July, we paid the RM 1 ringgit cash dividend, which is this one. Normally, company you declare first, then only you pay the dividend. You declare the dividend, next you pay. We don't have this drama whereby we don't declare, suddenly we pay. Very, very seldom. Yeah, I never heard that. So, debit dividend payable, this amount. So, 1 credit, 1 debit, 0 rise, close, and then we make payment, right? We pay. You see, we paid the dividend. So, credit cash or credit bank. Then we have another one involved dividend. This one, we declare only. So, we don't pay. So, debit dividend. Why here is 118 unit? Because 98 plus 18, we issue another 2,000. So 116 just now, this one, for up to 15 June, we plus 2,000. It's a 118. You okay? And then I multiply the dividend, we declare 1 ringgit 20 cent per share. So this is the amount of dividend. We not yet paid, we just declare. So credit liability, dividend payable. B, how are dividend and dividend payable reported in the financial statement? Your dividend, you will deduct from your retained earning. So for this question, my total dividend is 116 plus 141,600. So 257,600 is the total dividend. Okay. And then this dividend payable not yet paid. This one paid already. You see, I have credit, I have debit set off. We make payment already. So how much liability you have on this dividend? This one, not yet paid. So I put it inside current liability. Okay, dividend payable under current liability. All right, that's on the 15th December. Okay, that's all. How are dividend only? They ask you. So this is a treatment. Question 11. 15, I think. Sorry. 15. Okay, wait. If similar, I skip, I skip, not enough time. I think this one I skip lah. Maybe this one only I can highlight to you. What is this? Correction for overstatement. You made mistake in the last preparation of statement of P&L lah. You don't include the depreciation. Depreciation is an expense, right? So this time around, when you prepare 20x9 statement changes of retained earning, so I include this deduction of the depreciation. I think the rest same thing. Okay, you get your opening balance. I minus the overstatement or the depreciation, which is last year not yet deducted. And then I plus this year net income, net profit 350 is given the question. And then I minus off my dividend. Here you got two types of dividend, cash dividend and share dividend. We don't pay cash, but when we say we want to give dividend to the investor, we give company share. So we call it as share dividend. Same thing, it reduces your equity. So minus okay, these two we minus. So 869,000 minus 158, 711,000. Question 12. This one also similar like the previous question. The only thing here, you might be confused on the concept of this one, the outstanding shares. What is that? Okay, I think this one I have to go through or else you will be confused when you revise. Okay, I have following accounts. December 31st, 20X1. All the details is provided. I have ordinary share, NOPA, 1 ringgit stated value, 400,000 unit shares, authorized, 300,000 shares issued. What does it mean? What is authorized share? Authorized share is a maximum number of unit shares that the company has. Maximum number of shares that the company has. Let's say you have 5 cars. So maximum number of car you can sell is 5. Let's say you already sold 4 cars. So the 4 cars will be this one, shares issued. Mean you already sold 300,000 shares out of 400,000 units that you have. That's the meaning of this authorized and issued. Okay. Then ordinary shares dividend distributable. This one also new for you. Just now I told you when we paid dividend, we minus our retained earnings. Okay, we minus retained earnings. But here when you have this ordinary share dividend distributable, we just disclose here how much of our retained earnings that we are going to distribute as our dividend. So indirectly saying that how much you spend for this dividend, that's all. Don't minus this amount because this amount not yet so-called, you just want to know how much out of your retained earnings you set aside for your dividend, because all this while your dividend you minus. So be careful on this. I have share premium ordinary, I have the preference shares, I have the retained earnings, okay, and then what is this? The treasury shares. Treasury share always minus because you have share buyback. Share premium preference. We have to show the equity section. Okay, share capital preference, which is this one. I take all the details. Okay, 400,000 shares authorized. This authorized is just a memorandum, we call it, just a disclosure. These numbers, you see the value 150, this 300,000, is not for, this 150 is not for 40,000 unit shares. This 300,000 ringgit is not for this, it is for this one, the issued one. Why? Because you collect money, right? When you issue, you sell the shares to the investor, you collect the money from the investors. Okay, so here I have 40,000 shares, this one, 30,000 shares issued, so 150,000, I just take this amount. Next, I go to the ordinary shares, okay? I have 400,000 shares authorized, 300 shares issued. I just follow the details in the question. But why here I have outstanding of 290? What color? This color, green. Okay. Why 290? Because out of these 300,000 issued shares, I already minus this. I need to minus this treasury shares. We have share buyback. So 300,000 minus 10 left 290. Okay. Ordinary share dividend distributable, I just take from here. Share premium also from the question respectively. Retained earnings also from question. But the only thing I have to put these notes. Why? Because in the question stated here, assume that retained earning is restricted for plant expansion, blah, blah, blah. You just put like this, if tested. This is your so-called your financial statements, notes to the financial statements. Okay, notes to the financial statements. It is outside your equity computations. You have to declare. That's it. And then we minus the treasury share, so we get 2,465,000 total equity. That's all. Question 13. This one also similar. Okay, we have to prepare the equity part or equity section of your SOFP. Maybe I can go very fast. 5:35. Then okay, good. Share capital, ordinary shares value is 400,000. Share premium 220. Ordinary, return earning 250. First issued preference share with a par value of 125 or 160. So when you have this difference, issued and par value, you have share premium, which is this one, share premium for preference share. The difference between these, so which is 35. Purchase treasury shares. So when you have treasury shares, you minus from your equity, minus 40. Your net income 128. Okay. This one, since we have the opening return earnings, so 250. This year 128. And then we make a payment of dividend. So minus 33 from your retained earnings. Okay. So I get 345. And then this one, your share capital, the preference shares, 125. Where do you get it? From your par value. Okay. I have, is it? Share premium, share capital ordinary. Oh, this is preference share. Okay, sorry, preference share. This one, the par value, par value of preference share. Your ordinary share is from here. Okay, share capital ordinary 400. Okay, the rest I covered just now. Total equity 1085. 14. This one I must cover because I saw past question on journal. On January 1st, 20X3, Fairly Company issued 30,000 unit ordinary share with a 2 ringgit par value for 150,000. So, generalize each transaction. When we issue, we collect from investor 150,000. So, debit cash. And then credit your share capital, unit multiply par value. So, unit 30,000 par value is 2 ringgit. So, we have here 30,000 multiply 2 ringgit par value. Okay. 60,000. And then we have the difference, right? We have to top up 90,000 credit share premium. Then on March 1st, the company purchased 4,000 ordinary shares for the treasury. So debit treasury shares reduce your equity. So equity reduce on debit. So 32,000, 4,000 unit multiply 8 ringgit, 32,000. And then you buy back the shares. You must pay your investor. So credit cash. On June 1st, 1,000 treasury shares are sold. Here's the thing. You buy, after that you sold the treasury shares. So debit cash. You sold the shares, you collect money from investor. So debit cash. You see the process? So I credit treasury shares. How do I get this 8,000? 1,000 ringgit, 1,000 units, unit, multiply your treasury that you buy or you buy back and the one that you buy back, you purchase from your investors. That's why you get this 8,000. Okay. And then I have the difference. Debit 10, credit 8. I have to top up 2. This is share premium for treasury. And the last one on September 1st, 2,000 treasury shares are sold for 6 ringgit. So how much you collect from your investors? 2,000 multiplied 6, 12,000. Okay. And then how much is the share premium? Which is you sold at 6, your cost is 8. Now you something like you sold at discount, right? All this while, your par value is less than your issued price. Here is different. Your so-called your cost or your par value is 8 ringgit. You sold at 6. So now my share premium should be on debit because all this while you see credit. You have this credit because your cost is less than the collection. Like here, the 150,000 because you have 30,000 multiply. How much is one? January 1st. 30,000. This one is stated here. So I just put here lah. Okay. So be careful with this. This one. Why debit? Because you sold at 6. Your cost, your par value, so-called par value lah. But I cannot call this par value actually. 8 ringgit is your cost. I sold at 6. So my share premium will be debited. This is the balancing figure. Retained earning is a balancing figure. Leave it there. I go to the credit side. My credit side, my treasury share should be 2,000 unit multiply RM 8 ringgit. This one, the cost. So 16,000. Why you credit treasury share? Because you sold it. When you purchase debit treasury share, you see here, March 1st, you purchase. Now you sold these treasury shares. So credit treasury shares, 16,000. So credit 16,000, debit 12, debit 2. So this is the balancing figure. So meaning you don't have enough money when you sold these shares. Actually, you need to utilize your retained earnings to cover the difference between your cost and the price you sold these treasury shares. This is the only transaction you have in this tutorial. Yes. June 1st. Huh? 1st March or 1st June? 1st January? June. Oh, 1st June. Okay. This one June 1st, yes. No. This one is your cost. You see, always when you credit, you get your par value, you see? Par value. All double entry. This one is your, no. This one. This is your par value. Take your par value, the cost. The cost. I should take the cost, which is this one. You see, I purchased the shares for treasury at 8. Don't take this one. This one, the cost when you sold it, meaning you collect from your investor how much? 1,000 multiply 10. This one. Then go here. This is the issued price. This is your cost because the day I bought these treasury shares, this is my cost. This one I sold. Okay, it's always PV or your original cost compared with the issued price. How much you sell or you purchase. Depends the transaction. You can have sold, you can have purchase. Okay? This one careful, Question 15 also double entry, It's similar actually. 5:45 already. I think this one is almost like the previous. Issued, what is this? Prepare general entry to record the above share transaction. Okay, I issued 50,000 shares at 30 ringgit each. The effect of drinking the coffee. 50,000 multiplied 30 ringgit, you collect 1.5 million from your investors. Your share capital credit, unit, multiply your par value. How much? 10. You see? Okay, credit, this one, it must be you multiply with the par value. So 500,000. Different, 1 million. This is share premium. August 20th, we have purchase 25,000, 24 ringgit per share to be held as treasury shares. So debit treasury shares, credit cash. How much? 25,000 multiplied 24, 600,000. Fifth, reissued 9,000 treasury shares. Reissued meaning you sold. This one you purchase, this one you sold. When you sold, you collect money from investor, debit cash. How much? 9,000 multiplied 28 ringgit, 252. The cost, 9,000 multiplied 24. The cost that you purchase. Like just now, this one the cost, right? That's why you take this one 8 ringgit. Is it? Just now you ask me the 10. Oh, not here. See the cost. Take the cost. The day you purchase. You sold this much. Okay. Then the cost is 24. Purchase this one. The day I purchase. And then I have the difference. That is your premium. Your equity. No, I think this one also maybe you might confuse on the shares outstanding. Okay. I have shares issued. After that, we have the 25,000 is mainly due to we purchase. So you purchase treasury stock, your equity reduce. So I minus. When I sell or I reissued my treasury shares, I should plus my equity. Okay, I should plus my equity. So my outstanding share is 284. This one just memorandum lah. If you are headache with this, you can skip because this amount is more important. How to get this amount is actually the 300,000 multiplied 10 ringgit. That's it. If you are not sure about this, perhaps, these outstanding shares, don't write lah if you don't know. Simple. Perhaps there's no penalty lah on the details. Okay, last resort. I have share premium, treasury 36. I have share premium also for this ordinary. 1,000. I have share premium treasury 36. And then look here, we have share premium in the question 1.2. So 1 million plus 1.2, I have 2.2. And then the treasury shares, just now in total, we purchased 25, we sold 9,000. What's left? 16,000. So 16,000 multiply your cost 24. So minus 384. Treasury shares always reduce your equity. Okay, that's all. Very fast. Show you the past year question. Where is my past year question? You have any class after this? Abdullah, wait. Give me 5 minutes. Okay, very fast. Yeah, 5 minutes. I try 5 minutes, okay? Similar to your tutorial. So I say, I think this subject, no, I believe this subject, you repeat and repeat your tutorial, you can get A. It's not pass, get A. Company authorized issues 1 million shares, 5 ringgit par value ordinary share. During the year of the first year of operation, you got this transaction. Generalize the transaction. Okay. January 1st, paid the state 2,000 for incorporation fee. What is this? Just now, the organization expand. You pay costs to start your business. So debit expense, credit cash. 15 January, you follow the date one by one. Issued 500,000, 7 ringgit each. So you collect from your investor, 500,000 unit multiply 7 ringgit each, 3.5 million. Credit ordinary share, 500,000 multiply 5 ringgit par value. Remember just now? Exactly your tutorial. And then you have the different, right? Debit, credit. So it's a share premium. Next, January 30. Exactly your tutorial. We issue share because we want to pay legal fees. How much? 8,000. So debit organization expense or legal fees 8,000. And then credit your ordinary share. 500 unit multiply your par value. You get this much. So we got the difference. Just throw to share premium. And the last one, we purchase 15,000 of treasury stock. You buy back. Your treasury stock should be debited because it's reduced your equity. Equity reduced on debit. So how much? 15,000 ringgit multiply 10. So I get 150. So I must pay 150,000 because you buy back the share from the investor, you must pay back their money lah. And the one that they invested on day one. Okay dah, bye-bye. Thank you. You can leave now. Have a nice day. See you next week. And next week, still got class, okay? Revision. Thank you. You may leave now. Bye. Have a nice day. Thank you.